Today we will learn about IAS 7. IAS 7. Statement of Cash Flows. All entities following IFRS must prepare a cash flow statement in compliance with IAS 7. IAS 7 itself has not been significantly amended. Other IFRS standards, for example, IFRS 16 leases, may impact cash flow classifications. IAS 7. Statement of Cash Flows is an international accounting standard that prescribes how companies should present their cash flow information. It requires entities to prepare a statement of cash flows as part of their financial statements, classifying cash flows into three main categories. 1. Operating activities. Cash flows from the core business operations, including receipts from customers, payments to suppliers and employees, interest and taxes paid, other day-to-day business transactions. Operating activities can be recorded through direct or indirect method. 2. Investing activities. Cash flows related to the acquisition or disposal of long-term assets and investments. 1. Purchase or sale of property, plant or equipment. 2. Acquisition or sale of subsidiaries or other businesses. 3. Loans made to others or collections. Third is financing activities. Cash flows from changes in equity and borrowings. 1. Proceeds from issuing shares. 2. Repayment of loans or debt. 3. Dividends paid to shareholders. Key requirements of IAS 7. 1. Cash equivalents must be highly liquid, short-term investments. 2. Non-cash transactions, for example, asset exchanges, are excluded but disclosed. 3. Foreign currency cash flows are translated at the exchange rate on the transaction date. 4. Interest and dividends can be classified as operating, investing, or financing, but must be applied consistently. Importance of IAS 7. It shows liquidity and solvency, unlike accrual-based P&L. It helps investors assess ability to generate cash, funding sources, and investment strategies. Disclosures or exceptions. IAS 7 requirements. 1. Disclose non-cash transactions. 2. Reconcile cash equivalents. 3. Foreign currency flows. Means convert at transaction date rates. Summary of today's topic. 1. Cash flows are classified into operating, investing, financing. 2. IAS 7 enhances transparency and comparability. 3. Indirect method is more common, but direct provides clarity. 4. Disclosures ensure full picture. If you have any question, ask in the comments section.